Welcome to Momentum Monday. Today is May 24th, 2020, and Howard is drinking a Corona.
Corona for Coronas. I just had to run on the beach. This counteracts the workout.
Exactly. You just ran for you wasted 200 calories and now you're drinking 250.
I don't know what you burn running. I don't do it for the burn, the calorie. I only do 2.5, 3 miles. So I really just do it to clear my head on the beach. I don't run anywhere but on
it helps
my hips and my knees, but it's much quicker than doing a 2-hour ride.
Mm-hmm. What's your take on the Spotify and Joe Rogan deal?
I think I was long, so let's pull it up. I had no idea that deal was happening. Obviously, Joe did. I'm for sure you can see the guy has a bazillion followers, so you can see it leaked. Not on. I don't think you're not going to accuse the guy of doing anything illegal because he wouldn't know if the price is going up. But it's quite obvious. Look at the breakout. Have you ever seen a better breakout in a great brand? This stock is going to go to 100. So this is my favorite new idea I've shared with people. You're never going to see. You had VIX 90. You have Apple competitor. You have pandemic. You have Netflix. You have a perfect storm for stocks doing poorly. And this one has been in a range for 2-3 years. This is going to set off so many trends in direct listings. This is also, you can see how you could almost say this is like another death knell in the banks. Pull up Goldman. I'm going to get off topic, then I'll let you guys go. You can see how can't get a bid. This is another revenue line that will forever be lost to Goldman, which is IPOs. We are going to see hundreds of direct listings if the market stays okay through the next year. So if you pull up Spotify, it was a direct listing, one of the first big ones, if not the only good one. And you can see they priced it high. Go back to the weekly app. You see how they priced it high and people wanted their Spotify. But the great thing about direct listing is there was no lockup, right? The company didn't use it to raise money. Everybody had a chance for years to sell this. So a breakout here means more than a breakout of a regular IPO where the bank holds the shoe. This is like true demand for a company that everybody knows has tough margins. Everybody knows has Apple competitor, Tencent competitor, Amazon competitor, endless music competitors. But there she goes. That is not Robinhood traders. That is not, that's just pure demand.
It depends on the company. If you don't have any revenue or no profit for the foreseeable 5 years, you need someone like Goldman to take you public.
Right, but that's now going to be something that people don't want. What I'm saying is this sets the stage for consumer brands. Slack did it too. If we look at Slack, now the problem that Slack had as a direct listing, we talked about it a year ago probably on the show, is no one knew who the brand was. So now that the brand is known, you can see that Slack people will pay a premium because they use the product, they know the product. The pandemic brought that product more into the mainstream, right? Group chat. So if we go back to Spotify, now we can see that the real ones that work without banking backgrounds are the consumer company. I'm saying consumer companies, right? So Casper could have gone public much sooner in their life cycle, right? And avoided having to do it later in their life cycle and pay the bankers and do the slippage. There's so much slippage at these companies that they can't afford it. Like this you can't pay the shoe 10%, 8% of your stock and pay all those banker fees. So direct listings are going to be a thing. So don't be surprised to see much smaller, more interesting consumer brands, whether they be in weed, consumer products that are Instagram, the companies that want to use their stock to do creative things. So I think that is the biggest news, positive news of the week for the market. If we look at take it and now go through the market, which I am not even though everybody's, I'm really concerned about, the markets here. But what do you say?
So for a second, let's forget about the coronavirus. Let's say that it doesn't exist for right now. Well, we're talking about just 2 years ago, the Nasdaq 100 hit a 25% correction just based on raising tariffs.
And Trump had closed the government too, remember?
Yeah, on Chinese stocks, yeah, and closing the government, which, with or without it, there's no change. Right now, we are talking about delisting major Chinese companies, and the Nasdaq 100 doesn't even blink. It's within 3.3% from its all-time highs. So that's, very curious to me that we are still in that definitely buy the dip mentality where people are just shrugging off any bad news. Like bad news currently still counts for nothing. And all dips continue to get bought. And if you look at some of the charts in software, I mean, they're just incredible. Like the run that they had in the past.
But there's no entry, right? Like only an amateur, and I'm not saying amateurs can't make money. Only an amateur would take entries in this market.
Yeah, don't chase them. But even people who chased here, I mean,
no entries left.
Still
but in 2 days, that could be gone. In an hour, that could be gone. So
yeah.
Look at my favorite Twilio before Spotify, and there's no entry. I mean, I held it, but how do you enter that stock? I mean, I guess, but you got to have
time frame, yeah. But if you're a swing trader, I mean, you can enter here above the break.
I'm talking about real institutional buying. That it's been done. You had a year to buy that stock. Everybody hated it. Blah blah blah. Miss, and then the market just moves, and you can't get in. Someone like me who likes to position trade. I mean, you just let it go. I'm neither bull nor bear. I'm just letting this thing go because who the hell knows? Go to the weekly.
If you play, you buy on that day of the breakout and you forget about it.
Go to the weekly line. I mean, that's just not bearish. It doesn't mean I want to chase it up here, but I don't know where you buy that. 130, 140, 180. I don't know. So, I mean, there's just, and the old stocks keep getting worse. The Goldmans, you say, there's going to be so many bankruptcies the next 12 months, right? As the markets open, this is like a double-edged sword, right? Like
companies are filing for Chapter 11. I think Hertz was one of them, one of the big ones that.
I'm saying, like, the opening of America is only going to bring around bankruptcies. The private equity guys had every chance to take this before it went bankrupt, and they're like, "Fuck it, we'll let it go bankrupt, and we'll bid in bankruptcy." So you're going to see this times 1,000 in the old economy.
Yeah. So this company HOI, there is exactly in that business, consulting on bankruptcies, restructuring.
That's a great catch. I mean, I don't think I think it's probably factored in the growth, but wow, good call. So you can see that if that's in vogue and Hertz is going the other way, you can see, and Goldman can't get a deal done. That's the market right there. Spotify, Twilio, Hertz, Goldman, and Houlihan Lokey tell you what's going on. And then you throw in the biotech because everybody's speculating.
You're right now, software and biotech, definitely the two big leaders. Software incredibly strong, and there's still some interesting setups there. They're not too extended.
Yeah, Zscaler, like if you look at a weekly, that is set like this. I have a list of security stocks. I'll show people. Hang on, I'm in Koifen. I'm going to pull up in a sec. I'll take control of the screen in a few. But Zscaler on a weekly, I mean, I'm not buying it right here, but that settles down for a month or two, and the market gets through to all-time highs. These security stocks are going to go, especially with the China. I guess you could call it a cold war brewing with China. Not a hot war, but I feel like it's a cold war. Wow, look at these securities.
Remember last time when we had that narrative about U.S.-China relationship worsening? Exactly, software were the stocks that were leading, and a little bit of biotech. And currently, we're seeing kind of the same thing.
If you pull up XLRE, the real estate spider, I mean, you can see nothing. You can see the fear there. No one wants to be the sucker in the room. And if you look at SPG, the mall's open this week, and no one wants to be the sucker in the room. So they're either going to roll over here. Now, there's a lot of trick potential out there, right? It's hard to chase the tech up here, and you don't want to be the sucker in the room owning the old economy. So there wouldn't take much for the market to tip 10 to 20% here, or at least the hot sectors, right?
Well, the S&P at 295, almost 300, near its flat 200-day moving average.
Go to the weekly. I mean, I don't know how you buy this with a straight face into all this resistance.
I think the only way for the S&P to break above that level is for the laggards to catch up. For all those sectors that you just mentioned in leisure, travel, they just need to, start rallying.
Yeah, the speculators will be back. The Robinhood traders are not deep volume, right? But they will play Carnival and the airlines. The Davy J traders will play the Boeings, swing trade. It's not for me. I see all my friends speculating in jets, JETS, the airline ETF. I'm like, this is amateur hour. What with companies with the companies they use every day breaking out, they're playing in these stocks, which is just dumb. I'm trying to teach people, come on. When you have brands you use every day, Facebook breaking out to all-time highs, and you're playing around with jets, you're just wasting time, right? Just because you can do it doesn't mean you shouldn't do it. So for beginners, I think this is easy. Pay for mentorship. This has never been a better time. If you want to swing trade, pay for Ivan. If you want, just hit us up. We'll send you some people, but pay. Like, you have this beautiful opportunity in the world to trade for free and to trade 24/7 and to trade global markets. So instead of paying commissions, pay people to mentor you so you avoid wasting time in stupid things. So that would be, I'm out of, that was a free, another 10 lessons I've given people, Ivan. I'm done.
Exactly. That's a very valuable lesson for the rest of your life, basically.
I just don't understand. I'm paying tons of people. I'm paying more people than ever right now. Not because I use them every day, because I want sophistication around how I think about the market, because it's very hard. Just because the market's going up and we rallied. I have a new saying, it's buy the fucking panic, not buy the dip. You can't buy the dip.
Yeah.
The dips could be traps. With the VIX over 30, the dips could be traps. You got to buy the high spikes. It seems like we're trending, calming down, but at the same time, with bankruptcy rising and the banks not being able to get a bid and rates going negative in many countries, I'm not going to make any definitive statements here about the market. Steve Stratton, I'm going to take the screen over in a sec, buddy. Hang on one second.
Just let me know when you're ready, so I stop sharing.
Yeah, keep sharing. I'm just looking for a good chart here that I wanted to share. Okay, IPO. I'm just looking for one more. Keep going.
Okay, so real quick, back to the leaders, biotech.
Yeah, go through biotech, because I'm used to
biotech, one of the big leaders, and there's still so many setups in the sector after this big breakout a few weeks ago. The one negative about the biotech right now is just
negative with an F or a V.
Yeah. The one big negative right now is that the number of distribution days here are kind of increasing lately, even though it's been making new highs.
Yeah, I'm long this, so that's important to know. Okay, yeah, it's been a little volatile.
Nowadays, come on big volume, and this is basically the only concern. Otherwise, price-wise, it's looking extremely bullish, and there's still
seems like the dips will get bought. All the lines are sloping up. Relative strength 50-200.
Yeah, there's so many biotechs still that are looking.
That looks good. Ultragenics, NBIX looks beautiful. Regeneron looks amazing.
Exactly.
Hit me up. I have a big list here on Koyfin. Hit me up, everybody. Are you building lists yet on Koyfin, Ivan? I wish you would for people, because they're shareable.
Yeah, I mean, I haven't done that. I only have my Momentum 50 list, which I share with my subscribers.
Greedy bastard. Okay.
A lot of biotech there.
A lot of biotech. Okay, so I'm going to share the screen. I'm going to go through a few things, and I'll end with you.
All right, go ahead.
Can you see mine yet?
Yeah.
All right. So Steve Strauss, who's great. He works with JC. He's just an incredible thinker and writer. Really simple, really sweet guy too. I shared this on my blog earlier this week. You can see where the money's flowing, right? The strong get stronger, the weak get weaker. You can see people want their internet, people want their biotech. They don't want banks, and they don't want aerospace, right? Like I joke that Mango Mussolini spending money, just throwing money at space you can see how well that's paid off now that we've done that. It's just disappearing money, right? We got a Cold War with China, which has nothing to do with weapons at this point, and we have a virus. So guess where that's playing out? People want to be informed. People are using at home. So it's internet and biotech. That's driving the market. It's not the Robinhood people. It's real people, real institutions, real demand driving these two. And what are they selling? Banks and aerospace. I think they're going to start selling real estate. I don't know if they're going to start selling everything, but I think they're going to start selling real estate, and they're going to start selling hard the IBMs of the world. When they see the revenue numbers are going to be a disaster, right? And you can also see the internet companies kind of jamming this work from home mantra, like just to rub salt in the wound of the old companies. And you can see that the internet and biotech companies, maybe not so much biotech, they can work from home, right? They can tell their people to move to North Dakota and Wyoming and take a 30% pay cut and give them a budget to move, because it saves them I wrote about it today, it saves them $25,000 to $30,000 an employee a year, because they had to feed them and get their dogs groomed and do pedicures in the office and have masseuses. So you can see, if you follow the money, these two indices are going to be in a buy the dip, buy the panic mode for a decade. And these industries, aerospace and defense, when young people realize, I don't care how many tanks we have, when you can do this thing with viruses and drones and communication and cybersecurity, you're just going to see continued selling in these. The government's going to keep pissing money until voters decide, and voters realize that this is just a black hole, right? And maybe you'll see crypto emerge in the bank sector. So Steve's a great follow. I thought that was a really interesting post. Hang on, another one from Steve to kind of explain, because CNBC and Wall Street Journal, they're making fun of the young traders in the Robinhood crowd. That's not what's moving the market. Here's what's moving the market, okay? This is if you are rich in the rest of the world, okay? We are the best neighborhood in a shitty, whatever you call it. We're the best building in a shitty neighborhood, right? If you look at the relative strength of Europe versus the S&P, developing Pacific, the emerging markets, that's what's driving this market. Money, rich people can't wait to get whatever's left they have in Europe, get me out. And everything's denominated in US dollars from bonds. So you got the US dollar strengthening, you have everybody throwing money into the US markets. That's what's driving the markets, okay? It's not this $1,200 check that's going to a Robinhood account. So, watch the misdirection here. That is what's driven this rally. Okay, the next chart I want to show, and here's Koifin. If you want to hit me up, I will share my dashboard. I have a leading biotech dashboard. I have a COVID theme dashboard. I have a data center REIT, and I have a cybersecurity list. Now, I got lists for everything that people help me build. So if you want to build lists and share them, hit me up on Koifin. Next, I'm going to this is interesting, Ivan. David Cox. I love these CMTs. The S&P is higher than it was 200 days ago. So even though we're below the S&P, I thought below the 200-day moving average, I thought this was an interesting chart. He says if you squint, you can see an upward moving average. So again, I'm not into squinting. I can't even see fat lines, but you can see there, I don't know, like this next move, if it's not a head fake, is going to be a big move. Okay, next. This was an interesting thread from Sid. This guy I wrote about today. He's built the biggest remote from day one. I did a podcast with Billy, the VC in this deal. Built GitLab is the biggest remote company in the world. Okay, and I think before you start throwing around this term with stocks, with these remote work stocks at all-time highs like Slack, et cetera, read Sid, and he goes through a lot of the reasons why these partial remote companies, the half and halves are just it's not gonna work. Companies that were truly bred to be remote will do fine, but the hybrid is not gonna work. So I thought that was a great thread. I put it up on my blog today. This is our government. I keep saying Apple is our government. Lulu and Apple are our government. Lulu supplies the uniforms. Apple supplies the equipment. I'm looking to Apple and Apple only for retail. How Apple does retail upon opening is when I will start looking at retail stocks. Apple's going to be spending a fortune on gloves, disinfectant, spacing, how you enter the store. They are our federal government. That's who I look to, right or wrong, or they can't take the risk of putting their employees at risk because of lawsuits. So right or wrong, hoax or no hoax, rising deaths, flattening curve or no flattening curve. Apple's our federal government in the United States. Apple will show the way on how malls and retail are supposed to run their businesses. They'll set the standards on what people are going to pay. And until we have a vaccine, how Apple and Lulu goes, so goes the market, at least retail. Hang on. Next. This was a great, if you want to learn Koyfin, this is a great, if you go to Koyfin's Twitter feed, Rob, the founder, has great use cases of Koyfin for macro. Here's a great article on Spotify. You asked me about Joe Rogan earlier. Sorry, Ivan. Joe, ballsy move, right? They took the eyeballs. It's their Howard Stern moment. And more importantly, the stock went up, Ivan. So you were asking me earlier, what do I think? It doesn't matter what I think. When Google bought YouTube, everybody thought they overpaid. And guess what happened? Google stock never looked back from that YouTube acquisition. And if you look at Spotify's chart, it has not looked back from the announcement of that crazy expensive acquisition. This was the best story that I've read in 5 years. Did you read this one?
No, I didn't.
Okay.
Oh yeah,
so
actually, I did last week. Yeah.
Genius. Yeah. They were arbing venture capital. This is why I say marketing is the new engineering. These people, this pizza store figured out that the more pizzas they made at a loss, the more they could make, because DoorDash was kind of subsidizing it. So they were just making pizzas to deliver to themselves because they were arbing money on what DoorDash was paying for the business. So if you don't tell me that, no matter how much engineering you do, that was marketing engineering and using VC money to fund their business. I thought that was a brilliant article. Freight stories I'm reading as much about. Here's something else, Ivan. The IPO renaissance. It's a very thin ETF. Its IPO is the symbol. But you can see here, when the markets are crashing, this is kind of where I want to go hunting. If you type in IPO at Koyfin, you can see all the latest IPOs for the last year and a half. But you can see here the IPO ETF all-time highs. Okay, so everybody made fun of all these Uber. But this is where you go hunting in a crash. And you can see that you've got almost a double in the IPOs. That's way better than the 40% in the NASDAQ 100. So when you see a panic, look for the new companies, look for the volatility. You embrace the volatility, as we were doing back in March. And then finally, old school gold miners, Ivan, you were calling these out, up 77% in the last 2 months. Have you been playing any of these?
Yeah. I mean, quite a few times. And actually last week, kind of noticed that the positive correlation between gold and the S&P 500 is kind of starting to reverse as capital started to move into those the sectors of the regular part of the economy, of the old style financials and travel. We saw a down move in gold miners. So that positive correlation is starting to change, at least last week. We don't know if that will continue, but I think if the S&P 500, as I already mentioned earlier, I mean, the S&P is up to 295, 300, near its 200-day moving average. For me, the only way it breaks out and it goes higher is if we see some form of sector rotation. And currently, biotech, tech, software especially,
you're saying it may not be enough.
Are the dominant leaders. I don't think the market can continue higher just based on those two. So the only way we continue higher is if we see rotation. And if there is rotation, that rotation will be in those old economy sectors that you've been just bashing for the past 10, 15 minutes. I'm not saying there'll be a long-term play. I'm saying that there's got to be a short-term rotation into those for the rally to continue. Otherwise, it's just going to stall.
Yeah, I was looking for this article. It was a great article. I know I don't follow him for ideas. Hang on, my laptop just went into I got too many tabs open. I just went into the flying windows.
Yeah.
Let me get this. Let me get it back to you, Ivan.
Okay, I'll get it. No problem. Check. Okay. I'm going to stop your sharing. And
Are we back to your screen?
Mine. All right. Here we go.
Okay.
Yeah.
So where are you positioned going into the week? Do you have some longs on?
I have a few longs, yes. Definitely still a large cash position, still keeping large cash position overnight, but definitely very active throughout the day, taking on positions.
And then on the short side, what are you looking at?
Nothing right now, because it's been the long side
says more than pretty much anything we've said.
It's been really working. I mean, the few really weak stocks are like Chinese stocks, like this one, IQ.
The fun story, that IQ looks terrible. Netflix, the one that's I'm tempted to buy tomorrow and trade heavily this week is Baba, because you've got all the, no, I don't mean to like make light of it, but it's really fun watching Davey Day Trader get his ass kicked. The Baba at 190, people are going to barf this up. This is all bluster. China doesn't need the United States for Baba to work. It's selling off on the news. 10 cents sold off too. I am not a Baba fan, but I will trade this as the day traders get imploded here and trade against that group into moving averages. This is not going to stay headline news for very long. They're either going to make the move and America will deal with these stocks, or as usual, he will cave. And there is another story going on besides listing of these stocks. Luckin Coffee is a disaster. Proves again, this is on us. They're doing fraud. A lot of American companies are doing fraud. People need to, we're lucky to have these tools like Robinhood, StockTwits, Reddit. And people have to take some responsibility for this stuff. But these Chinese stocks, I mean, if you're playing them, I don't know. When the U.S. market's doing so well and this flow of money into U.S. stocks, as I showed relative to the rest of the world, is so well, and you're farting around in broken stocks and emerging market stocks, you're just stop. Pay for the mentorship, get your account, get yourself moving back in the right direction. And I think that's it for the week. We'll grab a taco or something. Is Little Lily's opening up a little bit?
Yes, mostly to go. Yeah.
Mostly to go?
Yeah, but in PB, there are some places that are actually open. Yesterday, I was there. It was
at my new favorite restaurant, right? And they just opened on the island, the Bueno Forchetta. But he lives on the island. He opened one on the island.
I know. Yeah.
Fantastic. So I'm back on Coronado for the summer.
Great. So we'll grab some pizza then.
Grab some pizza and a workout. And F45, are you doing it? You're not going to go.
It's not open, Howard. We are still in phase 2.
When it's open, will you go?
I'm sorry?
When it's open, will you be the first to go or no?
I would go if they give me a really good deal.
They give you a good deal on sweat and COVID? No, it's not just about a deal. You go just about the money. It's not about worrying about the...
No, it's not just about the money. I mean, yeah, I think I would go.
All right. Well, there you go. That's why people, I'm for you going. I'm just, you just got to be careful. You're an adult. You make that decision. I think that's why California is such a mess. I don't think they're letting adults we're going to have so many regulations in California. It's not going to be good for the middle class and the lower class. Really concerned about California.
Well, that's why you live in Arizona.
Yeah, but I mean, you need a strong California. America needs a strong California. California is just poorly managed. All right, well, have a great week. You think we covered everything, Ivan, for you?
We covered a lot, and we cannot cover everything, but that was plenty.
Oh, by the way, beer. Look at Sam Adams.
Yeah, the beer companies are not really looking great.
No, but the stock's on fire.
Oh, yeah, Sam Adams maybe is the one exception. Because if you look at the other ones, like Budweiser,
oh my goodness! So that's what I'm saying. Like, isn't that weird? I was scanning and I saw Sam Adams. It's like,
yeah, Sam Adams is kind of an exception. And you know what? Okay, before we end, a couple other trends.
Okay.
Let's talk about them real quick.
Yeah.
Recreational vehicles, big boom in sales, and their stock have been recovering. And I'm also thinking those companies that make like small boats, they might also see a big uptick in demand, and it's already showing in their charts. Just
Yeah, but they more than doubled. So that may be front running. Give me a weekly on those, Ivan. Wow. Man, I wouldn't have the nerve. That looked like bankruptcy a month ago.
many did.
Nice.
All right.
Nice double.
I think that's all.
The problem I have with owning these, even though they could be great companies, I don't want to be the sucker that like the warning was the bankruptcy was coming and then the economy opens and the bankruptcy happens, even though the stock's hitting all-time highs. Like it's bizarre. I just don't know what's really going to happen.
It's a great opportunity for many companies to raise money, and many of them are right now.
Hang on one sec. Look who wanted to say hi. She just gets excited when Momentum Monday's on.
It's her favorite, right?
Look at this puppy. Say hi to everybody. Okay, goodbye, Momentum Monday. What's that?
Is she long, chewy?
Oh, look at that stock. I missed that. Watch Lindsay get excited when she sees this chart. Look at Lindsay. That's toys. Toys and food. Toys and food.
All right, Howard.
Have a good week.
See you later. Bye.